Here's something most people don't realize until it costs them. Your credit score doesn't just affect whether you can get a loan, it affects whether your apartment application gets approved, how much you pay for car insurance, and in some states, it can even affect whether you get a job offer. And if you have no credit history at all, you're invisible to the system. Not bad, just invisible. And invisible can be just as damaging as having bad credit. The good news is this: building credit from zero is completely doable. With the right strategy, you can reach a 650+ credit score within 12 months, even if you've never had a credit card, never taken out a loan, and nobody ever showed you how any of this works. I'm going to give you the exact roadmap in this video. 4 strategies, the order to do them in, and the one thing most people do wrong that slows down their progress for years. Let's get into it. Before we talk about how to build your score, you need to understand what actually makes up that number. Because if you don't know what moves the needle, you're just guessing. Your FICO credit score, the one most lenders actually use, is calculated from 5 factors. Payment history is the biggest one. It makes up 35% of your total score. This is simply whether you pay your bills on time. One missed payment that goes 30 days past due can drop your score by 60 to 100 points. That's not a typo. A single missed payment. Credit utilization is second. That's 30% of your score. It measures how much of your available credit you're actually using. If your credit limit is $500 and you have a $400 balance, your utilization is 80%. And that's hurting you badly. Experts say to keep this number under 30%. For the fastest possible score growth, keep it under 10%. Length of credit history is 15%. The longer your accounts have been open, the better. This is why starting early matters. Even a single account open today starts building that clock. Credit mix is 10%. The scoring model likes to see that you can handle different types of credit. A credit card, a loan, that kind of thing. You don't need both right away, but it helps over time. New credit inquiries are the last 10%. Every time you apply for a new credit card or loan, that's a hard inquiry on your report, and it can ding your score slightly. Don't apply for 5 things at once. Now, you know what the score is actually measuring. Here's how to start moving each of those factors in the right direction. This is the fastest way to get a credit score from nothing. And most people have never heard of it. If you have a family member, parent, or close friend who has a credit card they've had for years, who pays it on time and who keeps a low balance, ask them to add you as an authorized user on their account. Here's what happens when they do. Their entire history with that account, how long they've had it, their payment record, their low utilization, all of that shows up on your credit report. You inherit it. You don't even need to have the physical card in your hand. The association alone can take someone from no credit score at all to a scoreable file within 1 to 2 months. Some people see an initial score of 680 to 720 just from this one step, depending on the primary cardholder's history. The primary cardholder's score is not meaningfully affected by adding you, as long as you're not out there running up a balance on the card. If they're worried about that, they can add you as an authorized user without even giving you the card number. The credit benefit still applies. This isn't a trick or a loophole. It's a completely legitimate feature of how credit reporting works. And it's the single fastest way to jumpstart a credit file from zero. If you don't have someone to add you as an authorized user, or you want to build your own credit history independently, a secured credit card is your next best move. Here's how it works. You put down a deposit, usually somewhere between $100 and $500, and that deposit becomes your credit limit. The card works exactly like a regular credit card. You make purchases, you get a bill, you pay it. The bank reports your payment activity to the 3 major credit bureaus, Experian, Equifax, and TransUnion, and your credit score starts to build. The key is how you use it. A secured card used wrong doesn't build your credit. It can actually hurt you. Here's the right way to use it. Pick one small recurring expense, a streaming subscription, a phone bill, something you'd pay anyway, and put only that on the card each month. Then pay the full balance before the due date, every single time. Never carry a balance. Never let the utilization creep above 10% of your limit. If your limit is $200, keep your balance under $20. That's it. Two cards worth looking at right now are the Capital One Platinum Secured and the Self Visa Secured card. Both report to all three bureaus, which matters. Some secured cards only report to one, which limits how fast your score builds. After 12 to 18 months of consistent on-time payments, most secured cards will upgrade you to an unsecured card and return your deposit. At that point, don't close the account. Keep it open. The age of that account is working in your favor. This one sounds backwards, but stick with me. A credit builder loan is a loan where you don't receive the money up front. Instead, the lender puts the loan amount into a locked savings account. You make fixed monthly payments over 12 to 24 months. Those payments get reported to the credit bureaus, building your payment history. And at the end, you get all the money back, minus a small amount of interest. So you're essentially paying yourself into a savings account while simultaneously building credit. And since the lender is holding your own money as collateral, there's almost no approval barrier. No credit check required. Why does this matter on top of a secured card? Because of credit mix. A secured card is revolving credit. A credit builder loan is installment credit. Having both types shows the scoring model that you can handle different kinds of debt responsibly. And that can add meaningful points to your score faster than either one alone. The best move, if you can manage it, start both at the same time. Get a secured card and a credit builder loan running simultaneously. The loan builds your payment history and credit mix. The card builds utilization discipline and revolving credit. Together, they cover 4 of the 5 FICO score factors. Credit unions are usually the best place to find credit builder loans with the lowest fees. Self.Inc. is also a popular option and pairs a credit builder loan with a secured card in one product. This one takes about 5 minutes and costs nothing. Experian Boost is a free tool from one of the 3 major credit bureaus that lets you add payments that normally don't get reported, like your rent, your phone bill, your Netflix, your utilities, directly to your Experian credit file. These are bills you're already paying every month. Boost just makes sure they count toward your score. It won't work miracles. But for someone starting from zero, adding 2 or 3 positive payment histories to your file at no cost is worth doing. Some people see their Experian score jump 10 to 20 points just from this step alone. You connect your bank account. Boost scans for eligible payments. You confirm which ones to add, and that's it. 5 minutes. Free. Here's what the realistic path looks like if you start all of this today. Month 1 to 2. If you use the authorized user strategy, you could already have a scoreable FICO file within weeks. Without it, you're still building. Month 3 to 6. With a secured card and credit builder loan both reporting on-time payments, you'll start seeing an initial score in the 600 to 650 range. Month 6 to 12. Consistent on-time payments, low utilization every month, and your score climbs into the 650 to 700 range. Some people hit 700 by month 9. Month 12 to 24. If you've kept utilization low, never missed a payment, and your accounts are aging, you're looking at 700 plus, which is where the genuinely good rates and approvals start opening up. The thing that kills progress is inconsistency. One missed payment wipes out months of work. Set everything to autopay. Treat that on-time payment rate like it's the most important financial habit you have. Because for right now, it is. You don't need a perfect financial situation to start building credit. You don't even need a credit card if you can find a family member to add you as an authorized user. What you need is to start and to be consistent. Get the secured card. Set up the autopay. Keep the utilization under 10%. And just let time do the rest. Next week, we're talking about student loans, specifically the income-based repayment options that most people don't know they qualify for. and how to figure out if you should be paying less than you are right now. Subscribe so you catch that one. And if you know someone who's been putting off dealing with their credit, send this video their way. See you next week.